Good morning, welcome to the morning review. This is Kim Watson speaking on Thursday, the 18th of February. Okay, looking at the euro dollar first, and the euros have been gradually working, it's having a decent retrace. It still looks like it could come off some more towards perhaps the daily 21 as a target, and maybe even that 200 and prior highs would be quite a good target if it does start selling off. However, we're looking at the movement here. Whilst there is some good lower high signals going through here and lower low signals. The one thing with the lower lows is the divergence isn't divergence. The RSI isn't really playing ball with this. In fact, showing us a bit of divergence. So it may look to recover somewhat here. Now, it's I mean, obviously weak markets and there's lots of news kicking around and things may change here, but in this short term, when you start looking at the hourlies, you can see the lower highs clear enough for the eye, the lower lows clear enough, so all very easy to see. Now it's just whether it has the strength here to push through this morning, maybe break this 6 o'clock candle, for example, and push up towards that R1, maybe towards yesterday's highs of the candle bodies, sit quite nicely with that, or whether it will just hold on here, just break a little bit, but then pull back within and sell off back towards yesterday's lows and maybe even down towards that S1 and the daily 21. So it really is, see how it sort of sets up first thing this morning. Now, as we've seen of late, there's lots of volatility kicking around here daily. It starts off in one direction, ends up in another, and mostly it started off in a positive direction and sold off. Although saying that, looking at some of these mornings, it's done both really. So there's not really a clear route where we are. One thing's for sure, the momentum of this sort of bigger downward price action has held up for now, and it with the inside price action here, with the prices between the prior high and low, it could just mean we could see a sort of a retest now. Even if we run into this sort of R1 area, it hasn't put a new high in there, so it could just chop over again. So we'll see how it runs. But for now, well, got to wait for that price action to show us the way, really. With the pound, well, just looking here, we had the lower highs coming through. It is looking weak still. Once again, there was divergence running in this 4-hourly picture, but it didn't stop it slapping down and running down even lower at one point. It is quite choppy. I think it's probably an understatement here. Again, you saw these sort of whipsaw actions yesterday. We got this Brexit sort of thing still on the European agreement still to be sorted yet. Break of the highs could see us running up towards the R1 area there. We have got the hourly 50 in the way, so it may just stifle it somewhat, but it could see us run towards the highs. The body highs would be literally into that 50, so it may be as far as it gets if it does break those highs. However, we'll see. To the low side, well, yesterday's lows are not too far away from where spot on to the S1 there, so it gives us the sort of guide in terms of the highs and lows of yesterday. It's pretty much with the S1 L1, but it has pinched itself a little bit. If you notice the way the pivots on the dailies here are pinched in, so we'll see. They may be easy targets and it may run through. But for now, the earning initially has got to be to the downside. But as I said, if you start breaking these miniature highs, well, we could see some further upside. Test yesterday's. Looking at the dollar yen, massively strong downside up until the last few days, and it's he sort of had a little bit rally off the S3 there. Currently heading back down towards it a little bit, but when you start looking at the 4-hourly pattern, it just may be looking like it could push on, continue towards that upside. That's what I'm looking at the moment in some respects. But an easier guide to that is a very badly drawn line there. Let's take that off and draw a line across there. Is, if I can, be good. is if we see a break of this sort of trend line here, and then I would expect probably more upside there. It's not a pair I trade a lot, and looking at it from this alley perspective, it's not a pair I really want to trade a lot either at the moment. It's likewise not giving up too much clue of its direction with um, the lower low, but then a higher high, and then the inside bar price action. So it's not really giving a great clue to what it may do here. So we need to really wait and see which way it breaks. Aussie dollar. So another one that has these massive bars, daily bars, which are swinging backwards and forwards and popping in new highs. There's lots of chop with the Aussie dollar at the moment, but the predominant thing is the higher lows, and to a degree the higher highs it's popping in on a daily basis. It's just about managing to do so. So the urge is slightly to the upside there, or more to the upside than some of the other pairings against the dollar at the moment. But there are some. I mean, we had the jobs figures coming out, which were a bit weak, and sort of had some suggesting that we may see some further easing. And since that point, it rallied. It's sold off again, and well, it's choppy as anything. We'll see how it works through the London session, but break of this upward trend may see us running back in towards yesterday's highs again. So it's a funny old pattern here. It originally did a bit of a Gartley pattern that was kicking in there, but well, part of it sort of worked, and then we saw the big price action yesterday on the weak US numbers. So, as I say, looks awkward in terms of what it's doing there. So not a clear market to be trading in many respects. Now the Canadian dollar, it's held on even through the sort of the very low oil price there. It's not really reflected it as much as it might have. We saw the lows kicking in with some divergence, etc., coming in on the oil price and the comments, and there seems to be some agreement to have an agreement, maybe on the cards, which may help the Canadian dollar a tad, but it may be limited. But still, at the moment, it's very much looking like it's in a downward trend, and any sort of further comments, etc., may just help that. Now, break of the Asian session lows could see us back down towards today's S1. Obviously, we've got a daily pivot untouched above us. It's one of the few pairs that has, well, the only majors I'm looking at here that has got the daily pivot untouched at the moment. It may just remain that way, but any change of tune here and a break of the trend line, well, we've got to run through the 21s first, but then the daily pivot would be an optional target. But it is very much, as I say, trending towards the upside with these funny old spikes in between. So that pretty sums it up for me. News-wise today, we've got the Fed manufacturing, Philly Fed manufacturing figures out at 130, which is not a great mover, but anything in these markets when they're a little bit choppy may just feed the fire. We have got a speaker at 8:55. I'm just noticing in the UK there. Not too sure. It's due to participate in a panel discussion titled "The Economic Perspective at the Swiss Finance Council's annual conference in Brussels." Well, maybe we see a bit of something coming from that at 8:55. If it gets out to the press. Otherwise, well, looking at 4 o'clock if my time's right on here for the crude oil inventories. They used to be at 3, so I'm not too sure if that's correct. Okay. So all in all, quite a quiet day on the news front. Markets are erring, well, mainly towards continuation, but there are some divergences that's there, so I think we need to be trading carefully. Okay, so that's me for the day. I hope you have a great one. Bye for now.